Hello everyone, welcome to the channel. Thanks for joining me today. Be sure to like and subscribe if you like this kind of content. Hang on today because we're going to chat a little bit. We're going to go a little slower today, but we're still going to move, so be sure to pay attention. So we're just going to talk about the state of the market and how we can be playing this market to still be making money and stay out of the mess. Okay, so I switched my room around a little bit, so forgive the difference in background there. But we're just gonna move ahead here, and I'm gonna be talking about some of the things that have been happening and what I expect the market to do. Now, keep in mind, I am not a financial advisor. I'm just gonna go through that real quick. Everybody has to do that basically to protect themselves from from liability, but I'm not a financial advisor. I am just a knowledgeable crypto person, crypto investor, and so take everything I say and do your own research with it. Check it out. See what you think. But because you know your limits, you know your risk allocation. So typically in bear markets like this, not that I'm not suggesting that the bull market's done completely, but it's a very bearish trends looking like in the market and everything. So what typically happens in the crypto space and the DeFi space is you go from launching new coins to staking. So it becomes more about the farming and the liquidity pool aspects of things. So if you keep that in mind, when Bitcoin price is low and all the coins are low, you typically focus more on farming, more on stable long-term farming. Now, some of the best examples of this are Curve Finance, Safer, Aave, Curve, on the Polygon network specifically. That's what I'm doing, but other people do it, on ETH or whatever you like to do. So, let's talk about algorithmic stablecoins, or just stablecoins in general. So if you're a low dollar investor, if you're completely new to the space, and you're not working with a ton of capital, less than 10,000, then you're probably or less than maybe like 5,000. Okay, so you're dealing with like 5,000 or less. You're probably not too interested in stablecoins because you're probably more interested in keeping your positions, right? You don't have a ton of wealth to protect. You don't have a ton of positions to protect. You're just trying to not bail out of the market. Okay, well, that's great. So here's my tips and hints for anybody working with less capital, anyone working with 5,000 or less, because that's very common for people to start with like 1 or 2,000, and maybe it's less. Maybe you're working with like 500. Take 20%. Take 20% of your liquid income. And be very disciplined. Be very disciplined, okay? Take 20% and play. You can play coins. You can play the markets, and that's buying low cap coin in DeFi. I'm talking about specifically DeFi. Maybe you're more of a centralized crypto, but we're talking about DeFi specifically. And you're gonna choose a network, and you're going to take 20%. And in no one position, you don't want to put all of your 20% in one position. You want to spread it out over 2, 3, or 4 positions. Okay, so let's say you take $1,000, and you spread it $250 out in 4 different coins, right? And why do you want to do this? Well, the reason why you want to do this is because it's a bear market. It's a bearish cycle right now, and so everything's low. So these coins have less traction. Farming is getting a lot of attention, and the coins are getting less. So if you're going to play with that money, you want to make sure that you're taking small bets, and then when you gain, you want to make sure you're putting that money away. Okay, and you're growing it as much as you can, and you're putting it in a safe wallet. You can even create 2 wallets. You can create one wallet for like stagnant funds or farming funds, and one wallet for trading. And I'm talking about, and it's all up to you. I mean, what kind of trader are you? What kind of crypto investor are you? You want to stake it and leave it? Do you want to are you into the auto compounding? Are you into the liquidity farming? Those are 2 very different things. Very, very different. Everything is different. Every platform is different. And so it's like, but my general tips or wisdom for you is never overextend yourself, it's going to stress you out, and you're going to be talking about it all the time, and you're going to be if when things get you too excited, it's kind of a red flag. It's called FOMO, and you want to avoid the FOMO, and you don't want to surround yourself with people that cause you to FOMO into mediocre or bad projects. And then there is a difference, because a mediocre project FOMO'd in can become a really bad project for you. Because typically FOMO happens if you're getting FOMO'd for something. There's probably 3,000 other people being FOMO'd at the same time, and that means that the prices are going to be really inflated. I'm talking about for small cap coins. I'm just using loose figures here. Okay, but there's probably thousands of people FOMOing into the same coin at the same time, and I've done it so many times. Like, I'm speaking from experience. These coins promise a lot, and some of them deliver, but can't hold their value. Does that make sense? Okay, so if a perfect example is, and I'm not trying to FUD. I'm not going to FUD any projects, but I might mention them. Okay, Bog Tools is a perfect example. It's on BSC. Maybe you've never heard of it. That's okay. They came out with some tools to use for trading. This is a sniping tool in particular. It was several months ago, and I FOMO'd in at it was like trading about $5, around $4 or $5, and then all of a sudden they announce this like sniping launch. Like you can get the best price on launch coins, and it like goes up to $11 to $13, $10 to $13. Okay, so you FOMO in at $12 or $13. It's like, well, is it going? The tool hasn't launched yet, and you have to own so many. So you buy, you would buy like 250 coins at like $10. Well, that's like $2,500. I mean, it's like almost $3,000. And so you got to be careful with that. That's a FOMO, right? And then the price you bought at the top basically, and the price kind of fizzles down. Because time passes, and when time passes, people are like, oh well, maybe it's not coming out as soon as it may. I haven't heard from them. There's other projects I want to get into, so I sell. You sell, right? So that's called FOMO. You're FOMOing in, right? So don't be wary of the FOMO and be disciplined. So don't be an all-in investor. Being an all-in, all or nothing investor makes you a bad investor. You might get lucky, once or twice, okay, but the odds of you getting lucky twice in a row are not gonna happen. So you might get lucky, you might get super lucky, and you might have like a 10x or 100x win, right? And that's amazing, but you may not get lucky the next time, and you might lose it all. So being an all-in investor is a great way to lose everything. It's a great way to lose everything. You only go in assign a percentage of your portfolio. Is it 10%? Is it 5%? If you're working with a low amount of capital, less than 5,000 or less, is it 20%? You should never be over 20% of your portfolio in any play, because it's so easy. You're rolling the dice every day. You have to think about this. Every day you are rolling the dice to see if that coin, let's say it's a great coin, great team, great platform. You're rolling the dice every day to see if that coin is going to hold its value the longer you have it. So what do? If you do go all in, you better be getting an amazing price. And I mean, you need to be buying at the bottom. If you can buy a coin at the bottom, which, how do you figure that out? It's like, well, I don't know. You can't figure out the coin, what's the bottom of a coin. But you find the best team, the best protocol, the best marketing, okay, with the best tools, the best working platform, working product, right? And you invest, you buy that at the bottom, and that's, but you're all in. And so when it goes up, you can sell and get your money back. You need to get that capital back. You need to be protecting your capital. And here's the thing. Here's what you'll see with experienced investors. Experienced investors love themselves, okay? And poor investors hate themselves. And what do I mean by that? It's a strange statement. I know it is. It's a strange statement, but a good investor loves himself. He loves his future. He loves his health. He loves his time. he loves his feelings. He wants to feel good. He wants to be healthy. He wants to have an optimistic view of the future. A bad investor is somebody who's like, oh, it doesn't matter anyway. Like, let's just, oh, well, yeah, and they're slaves to the emotion of greed and fear. And FOMO is caused by greed. It's an acronym for fear of missing out. But the fear of missing out is actually greed. And so you have to be okay. You actually have to be okay with missing the punch. You have to be okay with missing an opportunity. Not every opportunity, but some opportunities you have to be okay with missing, okay? And I'm going to give you a perfect example of how I resisted FOMO. I gave you an example of how I FOMO'd in at like $10 or $13, I think. Or yeah, it was like between 10 and 13. And then it fell, I don't even know what it's at now. I haven't even checked it, because when you start to lose things, sometimes you just got to cut your losses. Even if it's 50%, even if it's 80% loss, 90% loss, just cut the loss, and you shouldn't hold things at a 90% loss, actually. That's not what good investors do. But if it happened overnight and you didn't have control, you just get out and move on, But I'm gonna give you an example of when I resisted FOMO and it worked out. Okay, Iron Finance. So I was on Polygon. Is I don't know, like $1 billion, hundreds of millions of dollars on Iron Finance, and the APYs are upwards of 1,000, 1,600, 2,000%, right, yearly. Okay, so these are super crazy numbers. Some people are mining Titan coin. They're mixing Titan and Iron and Titan and USDC and Titan and MAT. All these stuff, right? And you have Iron Finance, and it's a algorithmic stable coin pegged to the dollar, pegged with backed by Titan and USDC or all that stuff. And I was seeing all of the people in the groups that I was in advocating for Iron Finance and going into Iron Finance, and I thought to myself, yeah, I could do that. Those are some good APYs. Everyone else is doing it. But then a thought hit me, and I remembered it from BDO, and I remembered it from like other types, carrot cake, and you maybe you don't know what those are, but they're algorithmic. They're pegged. They have a pegged value, right? Algorithmic coins, and I'm thinking to myself, when things get too big, the temptation becomes too great for greed. Like the temptation, the corruption begins to set in, and there are lots of bad actors as investors, but there's also the potential for corruption in development teams. And it's like when you get too much money on a platform, it's really, really easy. You start seeing dollar signs, and you start poking holes at the bottom of the basket, and just kind of letting some of that liquidity. Oh, they'll never know the difference, And there's a lot of stuff that happens. I know a lot of people aren't aware of what happens every transaction. You're paying somebody essentially, and that's great. That's a great way for them to make passive income. And I would love to have my own platform one of these days to collect fees and make good money and provide a service to crypto investors. I would love to do that someday, and I think that's an honorable and worthy thing. But it is a business, okay, and it is about making a profit. Crypto is not non-for-profit, never. And so that's why I don't necessarily like, and this isn't about Iron, but I don't like non-for-profit crypto coins. I rarely invest in them, but if I do, it's because there's potential to make money. That's it. That's the only reason I'm in. I'm not saving pandas and dolphins and all that stuff. It's like those are worthy goals, but those are personal. Those are on the individual. That's not in crypto. Crypto's, as we know, probably not helping the environment if that's what you're into now. But the reason people get into crypto is to build a future for themselves. Period. So with Iron Finance, I thought it's too hyped. There's too much FOMO. And I thought to myself, and this is what I said. I said, am I okay with missing out on this opportunity to collect, to farm? And the answer was yes, I am okay with it. I'm okay with it. And then, when you go into the details, it's like, well, it's too big. There's too much hype. There's too many people, and people are going to start seeing dollar signs, whether that's bad actors outside of the platform who are looking for exploits, whether that's dirty auditors who have audited. You see, we don't really understand what goes on in crypto, but there is infrastructures down the chain that have insider knowledge about, the coding. The developers, of course, have that. Like, it starts with the developers. It starts with the like crypto savvy people, just third extra parties, and then there's auditors that know what's vulnerable in the code, whether they report it or not. And I'm not saying auditors are crooked. I'm saying it's very easy. I'm saying it'd be very easy to be a crooked auditor. That's what I'm saying. And we shouldn't bury our head. It's not FUD. We shouldn't bury our head in the sand. Like, we should realize that there are exploits sometimes built in and sometimes taken advantage of by inside or outside parties. And so, millions of dollars, tens of millions of dollars lost. I wasn't in Iron Finance. I had the opportunity. I had tons of disposable Matic. Tons. I just didn't do it. I wasn't lazy. I asked myself a question. I answered that question, and there was just something about it, And my condolences to anyone watching who did get hit by Iron Finance. It's terrible. I've been scammed of thousands of dollars, so I definitely know how you feel. And I'm, my condolences to you. But again, crypto is about, if you want to build wealth in crypto, you have to learn how to wash your hands, and just get out of the platform. Don't watch it again. Don't stay on the Telegrams. It's like, let's say it's a good platform that screwed you over big time. Just leave. Just go to a different platform. It's okay. Like, it's not emotional. Like, people aren't computers, and so, like, I'm not saying you have to trade with emotion. I'm not saying that. There are certain emotions you have to fight. You have to control. And that's fear and greed. Fear and greed are the worst emotions for a trader to trade with. You cannot, if you trade with fear or greed, you're going to lose. You're rolling the dice. I mean, imagine rolling like a 20-sided die or a 100-sided die, and like you're like 1% chance. I mean, that's how these things go. Like, you lose every time. And there are feelings you have as a trader. It's like a gut that you develop going into these things. And maybe this is long-winded. Maybe I don't even have to explain this to you. But if you're a new trader, you need disciplines. You need disciplines to stick to, okay? And some of that is going to be keeping your trading capital small. Because there are people who have made $100,000 in a few months with a $1,000. So your amount of capital does not matter. It's going to be your ability to learn the lessons you need to learn and still have money left to play with. That's really it. I mean, that's really it, guys. Like, if you have $5,000, if you have $1,000 and you trade with let's say you have $1,000 and you trade with a couple $100, it's like, you can learn you can learn the lessons you need to learn in a year or a year and a half, or 2 years maybe. Not that you've learned it all, but you can learn the essentials of trading and who knows how much money you still have money left over. You know what I mean? It's like, who knows how much money you've made, and you can still have money left over. I have helped one of my friends, and I was in the trade too, turn $37 into $650. You do not need a ton of capital. In fact, even if you have tens of thousands of dollars, okay, you should only be playing with like 1,000. There's no reason why you can't win. And I've seen this before. There's so many really experienced investors that work with like $2,000 and $3,000 and 10x it in a couple weeks, in a couple months, and then move on, and then they do it again, and they're not playing with hundreds of thousands of dollars in one trade. And in fact, you shouldn't be, not that you're not allowed, it's just you shouldn't be unless you're super experienced, because you're gonna dump on people, you're gonna, you know what I mean, and not that that matters too much, but you should be playing with a low amount of money. So anyway, with these types of markets where they're at, when you're working with a lot of capital, you want to be considering, you want to be switching over to stable coins, okay, in the highs, obviously. But I am actually anticipating, I'm not a financial advisor. I'm just trying to teach you guys some lessons that I've learned and give you guys some tips and hints, that I've learned along the way, things that I've observed. And I suggest people taking stablecoin positions when markets start to dump like this, because you just don't know. And you can always stake stablecoins. There are good returns for stablecoins. If you're working with over $5,000, you need to be protecting at least half of that at all times. And what do I mean by that? It means when you make a profit with that money, you need to be pulling it out, putting it in trusted assets that you like. So whether that's BNB or Harmony One or Matic or Bitcoin or Ethereum, you need to be putting it into those, or stable, like a stable coin equivalent or whatever, and you can stake those for a long period of time, and you can play. Let's say you have $5,000, and you keep $4,000 in stablecoin staked on a trusted platform where you can consistently make money, and then you take $1,000 and you play with it on BSC, Matic, Ethereum. I wouldn't recommend Ethereum just because the gas fees can kill you. But like you're playing on Harmony or Matic or Polygon, or there's so many. Oh my gosh, there's so many. But like you just play with it, and you take $200, $150, $200, $100, and you just play with these tokens, and assuming you have the time to do that. Or you could just be a staker. But when these bear market cycles come, it's all about the staking. But you have to be careful about liquidity staking, because you're subject to impermanent loss and exploits, and as we've all learned. But that's just a part of the space. So that's really my video for today, guys. And I just wanted to teach you, what I'm doing right now and why there's not a lot of content, there's not a lot of videos out there right now, because it's mostly just about staking on trusted platforms, protecting your growth, protecting your assets. I wish you guys the best. Make good decisions. Thanks for tuning in. Be sure to like and subscribe. I would like to pull your attention over to my Telegram. I have some excellent advice and things on my Telegram, things that I teach people. And occasionally we get rugged. We've gotten a few scams on the Telegram. Sometimes there's call outs, but it's much more active than the channel. So I want you guys to definitely check this out. You can ask questions. We can kind of navigate the space together. Of course, we try to only recommend trusted platforms, but it's not always 100% all the time. But I want you guys to check this out and tell me what you think. Make good decisions, guys. Best of luck. Talk to you later.